Thank y'all for joining real quick here for this super quick episode of the Entrepreneur CFO Show with me, your host, Perry Jeffries, your Entrepreneur CFO, President of Diamond Equity Advisors, a full service investment advisory and business consultancy firm located here in Columbus, Ohio. So this segment is a segment called I Got Time Today. So here when I woke up this morning, I have some free time on my schedule, which doesn't happen often. And I put a request out there. I put a post out there and said, hey, what financial topics do y'all want to talk about today? And what topic came up? Of course, cryptocurrency. So let's talk about it. Anybody who has followed us on social media knows that sometimes I poke fun at the traders and the people who are promoting crypto and whatnot. And in all transparency, to keep it totally 100 with you, I have a cryptocurrency portfolio personally. My issue isn't crypto and investing in cryptocurrency. My issue is the amount of foolery and clowns who go out and promote it and really don't even understand it. And the harm that you cause individuals who are truly looking for a way to better themselves, to improve their financial situation, and they scroll through a feed of somebody that they know, they like, they potentially trust, and that person is pounding the table saying, buy crypto, buy crypto, buy crypto. So for the record, I think that is reckless. I think that is irresponsible, and it is an act of immaturity and amateur investors. With that being said, let me give you my take on cryptocurrency. When crypto first got popular here a couple of years ago, especially with Bitcoin rolling out, everybody was all buy crypto, buy crypto, buy crypto. So many of my clients reached out to me and said, Perry, what should we do? Should we buy this crypto thing? And with my clients, all of my clients have written financial plans. Let me say that again, written financial plans that address 6 components of their finances: their cash flow, budgeting cash flow, their risk management, so their insurance needs, life, health, disability, their retirement planning, knowing how much future sustainable income they need to be able to maintain their quality of life at some point in time in the future, investing, how they should invest their dollars with respects to where, how much return on investment they need to reach their goals, and actually how much money they should contribute, tax, optimization and planning, and estate planning. So those are the 6 components of a holistic financial plan. I share that with you before I give you my take on cryptocurrency is this: before you invest in anything, you should have a financial plan. In the year 2020, I believe I turned away $750,000 of people reaching out to me and saying, hey, I want to invest with you, Perry. And what I shared with them is our philosophy at Diamond Equity Advisors is we don't invest a dime of anybody's money without having a written financial plan. Why? That financial plan is going to give you the direction on when and how to invest your money, because investing your money is only 1/6 of what's included in a holistic financial plan. So with that said, when clients reached out to me and said, hey, Perry, should I invest in this cryptocurrency? Everybody's talking about Bitcoin. My conversation with them was this: hey, I'm not going to tell you not to invest in it, because I'm going to put a couple of dollars in it as well. But what we want to do is invest responsibly in it. It's almost, and cryptocurrency now is becoming a brand new asset class that we haven't seen before. It's highly volatile. So when we have an asset that we want to invest in that's highly volatile, our rule of thumb at Diamond Equity Advisors is to invest no more than 10, maybe 15% of liquid assets if we're being really aggressive. But let's say we just stick with 10. So what does that mean in layman's terms to you? From a philosophy standpoint with us, and I'm not advising you what to do, because again, I can't advise you until you have a financial plan, but I'm telling you our philosophy around cryptocurrency. If you have $100,000 in liquid assets, so that you got $20,000 in cash, you got $80,000 in your IRA or whatever the case may be, our philosophy around volatile asset classes is no more than 10%. So if you have 100, no more than 10,000 in that particular asset class. If you have $1 million, you know what? We can drop in 100,000, right? Because with that asset class, what we've seen how volatile it can be, where everybody's riding that roller coaster, and that drop, and there's crickets, and you don't hear anybody, and then it starts running again, and everybody's pounding the table. Well, those are probably the new investors who are just now getting into it and think like, oh, this is a no-brainer. Guess what? In investing, you're going to have ups and you're going to have downs. That is the nature of the beast. Just what happened with cryptocurrency, those ups and downs happen super quick. So it's not in the sense of investing that like, oh my gosh, it just goes up. All investments, all stocks, all investments to real estate go up and down. It just happens to move at lightning speed. It can be up 20% one day, 10% the next day, whatever the case may be. So because of the nature of that asset class, what we want to do, because it's still kind of speculative, what we want to do is no more than 10%. That's just a rule of thumb for us. Now, I'm not telling you to go and take 10% of your liquid assets and put it into cryptocurrency, because again, we haven't done a financial plan. You may not have a financial plan. What you want to do is get with your financial professional, who is a planner, who is going to address all 6 of those components, and then make a decision on if it's right for you. It may not be right for you. You may be in a place in your investment or in your investment, lifespan where you don't need a volatile asset class. But you know what? If it makes sense for your portfolio and your advisor gives you the thumb up on it, cool. My issue has never been with investing in cryptocurrency. My issue has been this: how dare you put money into crypto when you don't have a savings account? You don't have 3 months or a couple months of emergency funds set aside. How dare you invest in cryptocurrency and you don't have life insurance? So you put $1,000 in the cryptocurrency. You could have put $50 a month into an insurance policy, because if you die today, that cryptocurrency ain't gonna pay you, right? So you know what I'm saying? It's not gonna be able to bury you and provide that legacy. So cover the basics. Make sure that you have all 6 components of the plan covered. And then if crypto makes sense for your portfolio and your personal situation, then by all means, get you some. I'll be quite honest with you. Again, I have a cryptocurrency portfolio, and it's kind of funny because me and my wife, we look at that more than we look at, our IRAs and things in our retirement plans and other investments and things of that nature, because it's kind of fun. It's kind of like being, at Vegas, seeing things go up and down, right? But let me tell you how I invest in it. How I invested in it is, and this is, a lot of people don't know this. When the pandemic hit, a lot of us were stuck at home, right? And couldn't get out to, do the things that we normally do. So I can cut my own hair. I've been cutting my own hair now, since I was probably 12, 13 years old. But I love to go to the barbershop and get a crispy lineup, for sure. Like, who doesn't want to go to the barbershop and get a crispy lineup? Well, when I couldn't get to the barbershop, I said, well, that's about $40 a week, right? What can I do with that $40 a week? I decided to put $40 a week into my crypto account. So I've been dollar cost averaging $40 every week, regardless if Bitcoin is up, Bitcoin is down, sideways, $40 every week going into my Bitcoin account. You know what I'm saying? To the point now that it's grown pretty decently, right? Because I have some money in it before. But again, you'll never see me get on social media bragging like, oh, I bought crypto. And no, because that's immature and that's amateur, and we're professionals. What I'm sharing with you is just a strategy that I use, where it's like, hey, we have our financial plan. We have our 40 months of assets set aside that if something should happen to me, the family can stay afloat for the next 40 months and can maintain their lifestyle. We have life insurance. So we have savings. We have life insurance. We have a retirement plan in place that we fund to give us tax deductions and things of that nature. So we have all of the components of the financial plan. So yes, we're in a position where we can put some money in the cryptocurrency and things of that nature. So that's my take on crypto. I don't have the issue with individuals doing crypto. I have an issue with individuals doing trading. My issue is the irresponsibility, the lack of responsibility, and how reckless people are on social media, telling people, hey, go do this, without giving them a full plan. Wealth is created with the plan, not with, oh, I went and bought some cryptocurrency and I was able to go out and buy a Lamborghini. That's clownish to me. You know what I'm saying? Because you bought a depreciating asset with that. Why didn't you then take those dollars and put it into another asset that can give you passive income? Because again, that's where the wealth is created. So that's my 2 cents on crypto with respects to it. I'm not against crypto. And full transparency, again, I have a cryptocurrency portfolio that I put money into weekly, but you'll never see me get on social media and talk about, oh, I bought crypto at this. That's not what we do, right? So, but again, it comes down to having a plan. Do you have savings, right? Do you have enough cushion that if something goes wrong? Because if you put all of your savings, all of that you have available into crypto, and just so happen that week or that month is down 15, 20, 50%, and you need that money now to keep the lights on, you're screwed. So again, it's all about, but this is the same principle in stocks. I turn clients away who don't have savings and say, hey, we're not ready to invest yet because you don't have a cushion. Because the same way stock can go up and down, it's the same way crypto can go up and down. Crypto just moves a lot faster. So again, make sure you have a plan. And our concept and our philosophy on that is for an asset class like this particular one that's kind of volatile and kind of speculative. You know what I'm saying? We're still trying to figure the piece out. Our rule of thumb is no more than 10% of your investable assets. So that's what I have, y'all, today. Again, I'm not giving you advice. I'm telling you this is just our philosophy and sharing it with you because somebody asked a question. And feel free to share this if this was impactful to you. Again, Perry Jeffries here, your entrepreneur CFO, president of Diamond Equity Advisors, the cash flow concierge company, where we focus on closing the wealth gap one business at a time. Connect with us. Let us know how we can help you out. All right, y'all. Peace.